then I'm gonna start speaking. Okay. So listen, TJ. First of all, on the 15 minute, okay, the dealing range was established correctly. Sell side is here, buy side is there, range equilibrium is here. That is all correct, okay? Now, as you can see here, what happened is right before 9:30, the candle at 9:15 is violating the range GQ, okay? That's the first sign, okay? Now, let's go to the 5 minute. Now, this is the fair value gap you mentioned. 8:30 fair value gap on the 5 minute here. You said you wanted to see price rallying there, maybe like turtle swooping here, and then going for the sell side. Okay, that's what you mentioned. However, it could do that. Okay, there's nothing wrong anticipating that. However, if you were watching price today, Nasdaq today, along with ES, so let me show you what ES did here on the 5 minute. Okay, now here is that same high. What does it do there? It is taking that high, taking the buy side. Nasdaq doesn't do it. Okay, that causes what? That causes bearish S&P divergence within a premium fair value gap right here. You see that? This is a premium fair value gap, so it doesn't have to go for that high. If it goes for the high from 850, like the high you mentioned, that'll change everything. In that case, the market will not deliver sell side like it delivered today in that manner, like fast and because this is the second stage. So that's the first thing. Second thing, let's say you did not see the S&P divergence, you were just watching the Nasdaq chart, okay, without ES. Now here's what happened. Another thing, there's another divergence. I think it's not this one. Hold on, here at this high, okay. Nasdaq made a high there, took the buy side. Now if you look at ES didn't. Now this candle is the time is 8 o'clock, 8 a.m., way before market opened, okay? So this is a dealing range high once the market sets the low here. So one candle, the second candle, once this candle closes at 9:35, this is a sell side because that's a swing low formation, okay? Now you have a short-term dealing range from SMT highs all the way down here, okay? And if you look at it, it actually comes where? This is the premium portion of that range. And there is a fair value gap right there, and it's respecting that, okay? And it forms, like I mentioned, new bearish S&T divergence. This adds more confidence to sell side delivery. Oh, no sound, no way. I have to repeat all that. That's so funny. I'll wait for you. How you doing, Hydra? I don't know if you're not away from keyboard. Welcome back, TJ. Let me know if you can hear me, and please do tell me where I should start over. Like how long have you been hearing me? I'm just waiting. Give me a thumbs up if you can hear me. Check, check, check. Still checking the sound. The voice, the voice. Dun, 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 dun. Sound check. No problem. Take your time. I'm not rushing or anything. Take your time. If you have connection problems, do let me know so I can wait for you to fix it. So, do you want me to repeat everything, or do you want me to take it from somewhere specific? Still waiting for your for the 5 minute time frame. Okay. Let me delete all that, and I'm going to start over from the 15-minute time, 5 minute time frame. The 15-minute dealing range was here. Okay, no problem. So on the 5 minute, at open, you were anticipating or expecting a turtle soup or buy side delivery into the 830 premium fair value gap above this high, right? Now, there are a couple signs that market was giving you that it's not going to go for that high. One, it is already trading into a premium fair value gap here. Okay, there's a fair value gap here, which is in premium. Bodies are respecting, as you can see. And second thing is, if you were watching ES at the same time with NASDAQ, as you can see, ES is taking that high, which is causing what? It is causing a bearish S&T divergence. So that means NASDAQ does not and shouldn't go above that buy side, the 850 candles high, or the fair value gap you mentioned on the 5 minute, because that will change everything. That'll change the order flow, that'll change the market sentiment, and it is not going to deliver sell side like it delivered today in a low resistance manner. Okay, because if it goes above this, which means the bearish S&T divergence is failed, and because of that, it is going to form what? A breaker block here. Okay, that's the first thing. The second thing is, I'll show you one more thing. So, before market opened today, there was a 5 minute S&T divergence present at the highs of 8 a.m. Okay, so here, market did, the NASDAQ did make higher high, whereas ES made a lower high. Okay, that is a bearish S&T divergence. Then you wait for the wait for the low to form a swing low. So here, once the 935, please don't get to end it full an exercise for me to be using as a strategy rule. Okay, so here, once 935 candle closes, the 930 low becomes a what? It becomes a sell side because it becomes a swing low. Now, once that is a swing low, now you have a new dealing range. This is a short-term dealing range, okay? From the S&T high, which is buy side, all the way down to the sell side, this is the most recent swing low. Now here you can see at 835 and 845, it is actually in premium, trading in premium. Okay, this is the premium portion of that dealing range, and it is actually trading into what? The last premium fair value gap here. This fair value gap isn't discount. You should disregard this anyways. But this one is the only and the very last premium fair value gap in this dealing range. So you should be taking short here, and it is actually diverging as well, forming a bearish divergence with a yes. That means there's an additional confidence. So let me know if you have any questions. So you could have avoided that for two ways. One, you watch market NASDAQ along with the ES. Okay, if it's forming a bearish divergence, you don't expect more bullish delivery. And yeah, that's basically how you can avoid it the easiest way. And looking at the dealing range, if it's respecting the premium premium fair value gap with the bodies, that's a short signal. So let me know if you have any questions about this, AJ. Another way, I'll show you one more way. Now, because you can hear me, right, TJ? Just to be clear. Just let me know if you can hear me or not. I need a confirmation from you. Okay, so this is the third way. Now, you have established the dealing range or your framework from the 15-minute time frame, right? That means you need to be aware of this time frame's PD arrays, right? So here I'll zoom in at 9:30 so you can see it better. So the first signal, the 9:15 candle, which is this one, right before New York opens, it violates the range equilibrium. Okay, that's the very first sign of market being in a sell model. Okay, and then what happens afterwards is it is trading above or trading into the very last bullish PD array, which is in bearish PD array, which is in premium, and then goes off. So just to how can I put it down? Just to make things easier, I would say stick to your framework time frame and its PD arrays. Then go on the lower time frame. Like for example, this is the framework time frame. There's a premium fair value gap. The range EQ is violated, so we are looking for sell side delivery, right? Now what you need to do is as it goes into the last premium fair value gap, you go into 1 minute or 5 minutes if you want, but I would prefer 1 minute. Then you wait for short signals here. Now it's respecting the fair value gap. Broke down, maybe you didn't get a short here. You wait for what? You wait for a CB, and it's right here. If that is a short, if that makes sense. So instead of entering here right away on the 15-minute, you go into lower time frame and try to get an entry on the lower time frame with a smaller stop loss. So here, as it trades into the CB, you can take the short stop loss above the high, and you target what? So this is your first partial, and then you leave runners for your ultimate target here on the 15-minute sell side, if that makes sense. So this is basically your 15-minute target, and this is the 1 minute target. So let me know if you have any questions. Again, if you're framing something on one time frame, you have to be aware of its PD arrays. So you have to be monitoring that time frame at all times, and once it gets into your point of interest on that time frame, then you go on the lower time frame to get an entry. Okay, so in this case, for example, you don't have to look at the 5 minute. You don't have anything to do on the 5 minute. It'll just cause you more it'll probably overcomplicate things, basically, if that makes sense, but won't be considering discount. Here's the thing. Here, I'll show you, TJ. I'm gonna pull ES. Okay, I'm gonna go on 1 minute. Here is that price action. Okay, you have short-term low. It made a new high, so this is in dealing range high on this time frame, right? You have a short-term dealing range. Does this look like discount to you? To me, that looks like premium right here. And there is, let me see. This is the price action. There is a divergence as well, I think. Let me see, 1 second. I mean, kind of a divergence, not really one. So here, boom, boom, boom. Is it this one? I mean, kind of. Not really the one I would use, but so in that short-term dealing range, this is not in discount, it's in premium. And here is the confirmation. Range EQ violated, traded up into the last premium fair value gap one last time, gave a chance to short the market one last time, and then it delivered towards sell side. Very, very good entries. It is. It has a dip past EQ into discount. That's the only framework time frame though. That's totally different. So here, what you're doing is you're trying to catch the 15-minute distribution on a 1 minute time frame. Okay, so what you're doing is, let me let me do this. Okay, I'm gonna put myself on the replay mode here. Okay, right about there. So what I'm gonna do is I'm gonna split my screen. I'm gonna put Nasdaq 15-minute time frame here because that's the framework time frame, right? So what we're doing is, not this chart, 1 second. What we're doing is we're trying to catch this move on the 15-minute, not the 1 minute. Okay. So what we do is we watch the 15-minute time frame because that's the framework. It trades into the point of interest, which is the premium fair value gap on the 15, right? Then you switch to 1 minute. Basically, you wait for a confirmation, right? Here, we just still wait. You can short this too, but that's more advanced. Okay, you wait for a displacement. Displacement is there in premium. Now you short this. Okay, short that. Where it is here. Now you need to watch as so. Here's the short-term sell side. Okay, this is the short-term sell side. That will be your partial. Once it trades there, okay, let's go, let's go, let's go, let's go, let's go. Okay, once the trade's there, this is your partial. Let's say you close half off or more than half off. Now, once it gets there, your stop is at break even, and then you switch to 15-minute, okay, because this is what you're trading, and you need to manage your stop loss accordingly on the 15 minutes. So, for example, this candle shouldn't turn green. So you put your stop loss at, for example, it's open here. You see what I'm saying? Yeah, I'm recording it. Don't worry about that. And then it goes for the sell side. You collapse your trade there. So you have to work. You have to. How can I say it? You have to do multi-time frame analysis. You can't just enter off 15-minute time frame. I mean, if you're feeling fine about that, you can do it. But personally, I don't do it because in futures you can't manage your size just like in forex. But since you're trading forex, if that's what you want, you can do it. Here, for example, what you can do with forex is the premium fair value gap, right? You have the time, you have the let me delete that. You have the framework on this time frame. You don't deal with the 1 minute or the 5 minute, okay? As it moves into the last premium fair value gap, if you're short, you short that, okay, on this time frame specifically. Your stop loss will be much larger though, but you can size accordingly. So here's your target, and then your stop loss will be where? It's going to be above the buy side on this time frame, right? And then you target the sell side, which is 2.94 hour trade, which is decent. But you have to size accordingly. So 45 point stop loss, this is not feasible for features, but I know it is feasible for Forex. So if you get confused with like multi-time frame analysis, lower time frame, etc., you can just execute on the framework time frame if that's what you want. But for me, if you ask my personal opinion, I would recommend you training yourself to do multi-time frame analysis. So for example, you find the framework on the 15-minute, then once it trades into your POI, you go on the lower time frame, preferably 1 minute, then you wait for an entry there. Whether that'll be an order block, fair value gap, or something else, that's up to you. It could be anything. Can you make an example of Friday? Friday, you mean last week? All right, let's take a look at it. Let's see. So Friday last week is down. Wait, where is it? Down here. Okay. All right. So on Friday, let's. Oh shoot! What happened? Hold on 1 second. Let me fix this real quick. This is yes on the 15 minute. On the 15 minute. Okay, the Friday's price action is right here. Okay, let me go on ES as well. So here I am looking at the 15-minute first. Let me just scan it real quick. So on the 15 minutes, there is, I don't see an S&T. Yes, there's no S&T on the 15, but there is S&T on the hourly, it seems like. One second, let me just fix this. All right, cool. So here's the S&T on the 15. The one over here, okay, and then there is also one at the lows, okay. That means market diverged down, and this could be a potential target, okay. Once you have that down, now you have established your directional bias for the day, which means because there's a bullish divergence, you're targeting the bearish divergence. Simply put, you can also use this one if you want. There's nothing wrong with that. But let's keep it to this one for now, okay? So once it's there, let's go down to 1, okay? Oh my god, this is gonna be pain in the ass. All right, once it's down, this is the bullish divergence, okay? Now what you need to do is, I'm gonna skip all the way to 9:30. All right, this is 9:30 open, assuming you're not trading before market opens, okay? That's what I'm assuming, which you shouldn't anyways. Oh, shoot. All right. Now, because you know that there's a higher time frame a draw on liquidity and there's a higher time frame bullish divergence, that means you are bullish on the day. So to go bullish, wait for bullish market structure on the lower time frame, preferably on the lower time frame. Now you scan the 1-minute highs, okay? That's what I do the first thing in the morning. So I'm looking at the highs here, okay? Scanning all the way up from here to down here. What I'm looking to see whether there is a bearish divergence at these highs or not, okay? Because that's going to be the target for the buy model. So here, I think there is one. Let me see. Yes. So here, there is one divergence. You see that on the 1 minute? That's on ES, and this one is on Nasdaq. And then let me keep going more. There's one more here. ES made equal highs. Nasdaq didn't, so that's another divergence. So this is the buy side. Okay, let me delete this. So you have a target now. Now what you need to do is you wait for structural shift, bullish divergence at the lows, so you can go long safely. Now I'm looking at the longs. Here, there. There's no divergence just yet, okay? Here, there's no divergence. I think there might be something here. No, they might be both making lower lows. So there's no divergence, no reason to go long just yet, okay? So you wait for the divergence. So let me go forward. On ES, where is it? Right here. I might miss it actually. But anyways, I might miss this. Is it divergence? So here's a divergence. This is a divergence. Now you wait for displacement. Right there. Okay, now you wait for displacement. This is New York Open. There's no displacement. Now there is a displacement, but there is a bearish divergence. Okay, if it holds that high, there's a bearish divergence on the 1 minute. So I'm gonna skip one more. It's still going higher. There's no entry and no S&T formation. Just okay. Now the S&T is confirmed. Okay, with that candle's close. So what you need to do is, because this is the second leg, you annotate the NYGQ of this S&T low to this high and wait for a pullback. Okay. Going further. Still waiting. So you have to adjust the high. Now you have a new dealing range. This is the discount portion of the fair value gap. So you put a limiter there if you want to, or don't. That's up to you. But as it trades down there, that's your, so here, that's your short long, okay? And you're targeting the S&T high, which is the buy model here, the buy model target, okay? This is the first leg, and this is a partial if you want to. So here, let me go further, go further. It's still holding this, what is it, the CE. It formed a trap. Now this is your partial. At this point, your stop loss has to be at break even. This is a TP. You take partial there, and you keep the rest. At this point, it's what do you call it? It's risk-free trade. Now it stops you there. Okay, you get stopped at break even after paying your, oh no, after paying yourself. Okay, where is the, oh my god, shoot, right here. So you take partial there, and here you get stopped out at break even after paying yourself. Okay, so that's how you could have traded the Friday's price action with multi-time frame analysis. Now here's the thing, there is no, so it didn't take out the drawn liquidity. What does it mean? It means every sell side delivery will be manipulation. Okay, so here comes down here, makes a trap, so here forms a trap. So this doesn't change the sentiment in the market. The draw, as long as the draw is buy side, draw liquidity is buy side, which it is. Now this is a trap, trap fair value gap retest, send it higher, then it consolidated. Okay, which usually leads to what? It usually leads to manipulation for a power of 3. This is a trap. What does, and if it's a trap, it's also, oops, not that. If it's a trap, it also means it's the sell side, right? So this is the sell side. What does it do here? It's coming down here. This is a manipulation. Oh no. It's a manipulate. Oh, come on. Sorry, bro. Manipulation. V-shaped reversal. Now you wait for what? You wait for the first SMT divergence after V-shaped reversal, okay? This is a manipulation now. You know that. The draw is here. So this could be your second trade. Let's read the lows, okay? I'm looking at the lows. I'm waiting for a bullish SMT divergence here, okay? And do I see it? I'm not seeing it right now. Here, the first one. Right there. That is your long. After a V shape, SMT divergence within, I think it's this fair value gap, if I'm not mistaken. I'm way too off. Here. It doesn't have to be fair value gap, but if it is, it's better. You see that bullish divergence? That's the very first bullish divergence after this V shape, okay? You can also use this one because that's range equilibrium. Here, you can see that, that's range equilibrium. You can also long this, but this is a better setup because this means the market will not manipulate furthermore. So it's safer for me personally. So what you do is, as it diverges, so the divergence is confirmed with the discounted close, you go long, okay? Now what you do is, as it moves further, okay, as it moves further, it's still consolidating, okay. Now it's moving further. Now you can put your stop loss at break even basically. Initially, it's going to be down here at the S&T. As it moves, so it took the buy side here. Once it does this, now your stop is at break even. And if you want, you can take partials. And this is your TP. Boom. You close it. Pick DR from swing, but now you're mentioning S&T, which is please. Both is fine. Either or is fine. I'm using S&T highs and S&T lows to get more precise range equilibrium. But if you use swing points, there's nothing wrong with that. It's the same thing. So here, for example, I'm looking at this leg, okay? Swing low, swing high, right here, okay? It comes to range EQ, one more time and sends it. So like I said, there's nothing wrong with either or. I like to do the SMTs because it gives more precise level, in my opinion. Um, and that's it. But you don't have to do that. You can look at swings. There's nothing wrong with that. It's gonna give you the same stuff. I mean, I'm recording this anyways. You can rewatch it on demand as much as you want. Um, right now, like maybe some things sound confusing for you, but again, you gotta put in the work, put in the time, study, rewatch this video a couple times to understand. Um, yeah. Let me know if you have further questions. Okay, please my summary before my exercise rule. Wait, oh, so you want rules? Wait, I'm confused. Can you rephrase that last thing you said so I can understand it better? Rule to follow, my exercise rule to follow, so to avoid distraction and confusion as rules. I mean, number one rule is if you identify a framework on one time frame, stick to that time frame's PD arrays and find executions on a lower time frame. Okay, that's the rule number one. Second rule is um, you can stick. I mean, depends on what you want to trade actually. Like if you want to scalp, you can just stick to the second stage or second leg, range EQ rebounces basically. Or if you want to catch it all, um, what you can do is you can stick to the V-shaped reversals first leg because it's easier to see. There are a couple things. Just if you just tell me what you're looking for your model or for your strategy for your exercises, I'll be able to help you better, I guess. I'm back. For now, I'll say I want to better at the mark of the digging range and not to get confused if price didn't get or get too early for my POI or get wrong. I mean, the thing is, you can't be right about your POIs every single time. Sometimes you'll be, yes, you'll be right about it, you'll be right about the narrative, but sometimes you don't. And the easiest way I found to avoid um, or to understand when you are wrong with your point of interest and you need to be kind of like open-minded is just watching the market, different assets simultaneously. Because if it's forming a bearish divergence there without getting into your POI, you're not going to get it. So you have to be open-minded to short it lower than you want. So you need to stay open-minded and you have to watch the market. Um, like the assets simultaneously, ES and Nasdaq, or US 100 versus US 500. So because you're trading forex, just because you want the upper fair value up here on the 5 minute, not that one, this one. The market doesn't have to do that just because you want it. If it's forming a bearish divergence there before doing so, it's forming a bearish divergence, right here. Where is it? Here. The most important thing is just understand the framework, build the framework first, because without the framework, you literally don't have anything. Any CB you see, any fair value gap you see, any order block you see doesn't mean anything without the framework. So work on the framework. You're getting at the framework. I like it. Well, you say so because the Friday 7th and Tuesday 11th, you chose the choppy days though. But it's still delivering, but you're choosing the choppy days. So this is Tuesday. As you can see, it's range bound market. It still delivers on the lower time frame, but that's the thing. Like you need to understand when it's choppy. If it's choppy, you need to go down to 1 minute and do all this work on the 1 minute. Like for example, let me go down there. Let me go down here. Okay, I'll show you what. 1 minute. Okay, it's the same thing on a different time frame. I remember this PA. So this is a bullish divergence after a reshape. Okay, in the fair value gap. Now you don't believe me that's a bullish divergence? I'll show you. I'll prove you. This is the first leg. Goes for the buy side. It forms something here, right? And that's the dealing range high. This is on the 1 minute. Comes down to what? Discount fair value gap right here, and consolidates. In this consolidation, it forms a new divergence and sends what? Sends price towards the short-term buy side, which is this high. That's a scalp. This is the second leg, and this is the right here, the first leg. So even if it's choppy day, like you're choosing Friday and Tuesday, both were choppy days. So the thing is, if you know that it's range bound or it's likely to be a range bound market, you do the same thing, literally the same thing on the lower time frame instead of doing it on the 15. You see what I'm saying? This is one setup for life, and this is the first leg. So I'll show you on ES that's bullish S&T divergence. So no one caps me. I remember this PA. I watched it live. All right, here. Where is it? Right there. Makes a lower low. Okay. And Nasdaq and ES makes a higher low. This is the dealing range, and then delivers the first buy sign. Okay. And what are you targeting with the first leg? You're targeting the S&T highs, which is this one. And let's say you're targeting this one right here, right? But what happens is ES already took that, so you collapse the trade there if you want to. And then you establish the second leg, S&T low to the swing high, comes down into discount, and that discount, yes, it's accumulating, consolidating, yes, but it is diverging at the same time. Here, right about here. So that's a long. Maybe you don't long that SMT, but maybe you can long after it inverts the discount pair value gap. You can long that and close the position at the short-term buy side, if that makes sense. So again, it's the same deal. We just do it on a different time frame when it's choppy. But it moves exactly the same way, like I told you today. V shape, rejection, right? You wait for the first SMT. As it diverges here, you can long that, okay, in a fair value gap. It doesn't have to be a fair value gap, but if it is, it's better. Long that first side. And how long are you gonna hold it? You don't even have to hold it all the way up here. Like you can wait for an SMT divergence to collapse your trade, or you can target the short-term buy sides. That's totally up to you. It's your preference, basically. Again, I'm gonna say it one more time. On range-bound markets, it's gonna be the same deal on the lower time frames. Okay. Sometimes it's gonna be a range-bound market, but it's gonna be a large range-bound market like Friday, and the setup, the framework will be on the 15 minutes. So you're gonna have a 15-minute high, 15-minute low, and the dealing range on the 15-minute in a short leg, short range, and it's gonna move in that range. So yeah, TJ, I'm gonna let you go here. Okay. I also need to record the end of day, the daily market review. I'm gonna do that in a minute. I'm gonna let you go for now. Okay. Let's do this more often. I want you to put in the work, and I want to make sure that you're putting in the work. And I'll send you this review, this recording in about like 10 to 15 minutes, okay? So you can rewatch it on demand as you wish. Thanks for showing up. Keep showing up, TJ. Keep showing up. Your exercise. Okay, I'm gonna give you an exercise. Go on the 1 minute today, okay? What I want you to do is go on the 1 minute New York session and find me either buy side or sell side deliveries, doesn't matter whichever side you want, and show me the first leg and the second leg. For example, like I just did here, V shape, bullish S&T right here, first leg sets the high, you have the low from S&T, and then goes for the second leg. Okay, show me this from today's price action. It could be sell side delivery or buy side delivery, it does not matter. Also, one more thing, because you asked, What if you take the SMT, not SMT, sorry, the range from swings? This is a great example. You can take it, but here you're gonna miss it. This happens quite a lot. So I would say stick to the SMT. So that's it, TJ. I'm gonna have to let you go for now. Like I said, make sure to do your exercises, do your work behind the backstage, so to speak. And please submit me your exercises so I can review them, give you feedback, and see your progression. All right. So yeah, you have a wonderful night, buddy.